Good day, everyone. Nice to see you again. Today, we would like to discuss about again the infrastructure, utility, and transport sector, but we are going to focus on subsector shipping. All the valuation analysis done by stock valuation calculator. In this group, we have 40 companies in infrastructure, utility, and transportation. And for specific focus for today, shipping sector, we have 14 companies, and we'll take a look at in the next few slides. This is the profile of this index sector: transportation, infrastructure, and utilities, all summed together, and we see the uptrend line forming since the end of 2011 until 2013. Well, today index went down quite deeply, but if you see the growth, the average growth of the trend line is 65%. The sector include with telecommunication, energy, transportation, non-building construction, and toll, harbor, and airport. So how's the distribution of market capitalization in this sector, in this industry, infrastructure, utility, and transportation? You see the biggest uh, contributor on the market capitalization is Telecom Communication Group, and our focus for the transportation, which is shipping is included, is the smallest, only 8%, even though the number of company belong to this group is 24. Next, we see the historical trend on the market capitalization. You see the domination, the leader is Telecom Group, followed by energy, and our focus today, smallest contributor is transportation. So we can see the formation of the marketing capitalization especially for the shipping. In this transportation business accounted 45 trillion. If we break down, there is three element, three subgroup, which is shipping, land transport, and transport including taxi, intercity transport, and etc., and airline. Airline only, if we see back again, it's very few, only three if I'm not mistaken. So shipping accounted more than half of this transportation subsector. And next, we would like to see the company's financial profile specific for the shipping company. We have a 14 shipping company, and we in this picture we short and rank based on asset size. We see that the first or the biggest asset belong to BLTA, Berlian Laju Tanker, with 26 trillion in asset, followed by Samudra Indonesia is SMDR is below 7 trillion, so it's quite big difference from the largest. The second largest is only a fraction, is only than 7 trillion, and we broken down into the smallest cap, which is asset below 1 trillion. There are 3 companies: SDMU, Nelly, and TPMA. So if we see in this bracket, the red bracket, we can check this is a company called Trump. In terms of the market cap, the company is the largest, but in terms of financial ratio, it's worse because all negative in return on asset, meaning they are running losses. The same is the return on equity negative, they are running losses. So see, there's earning after tax negative, they produce the free cash flow negative, and working capital also negative. So even though BLTA is the largest in terms of asset, the return on asset is very small, only 6%. Return on equity, well, it's quite okay, is slightly below standard, 22%. The market cap is not the largest. It's not the largest. The market cap is number 2 after Trump. There is a question mark why Trump, with his unsound financial ratio and financial performance, almost all deficit, is the most liquid or demanding from the trader or in the stock market. We also check APOL, APOL. You see there's a return on asset negative, meaning that net profit also they are running losses, of course, even though the free cash flow is positive, but the working capital deficit is too high. So that's why return on asset negative. But why return on equity positive, and then the number is quite good, is 25%, is same level as industry standard for the good performance. This is because the equity is negative, so return on equity is fraction between earning after tax and equity. If negative and negative, so become positive, but actually it's a bad performance because equity is already negative. So next, we see the investment prospect of this shipping group, and we broken down the 14 company based on market capitalization. You see Trada Maritime is the number 1 in terms of market caps. The price is 1,300. How about the valuation? Valuation is the last 3 years, from 2011 until today, the valuation negative, despite positive in this valuation 2010, but the number is very small, very small compared to the market price, 21 versus 1,300. So there is a quite anomaly investor, trader are interested in buying, or they are rushing to buy this company with unsound performance. Second largest market cap is Berlian Lanjut Anchor. This is the largest in asset. The price is less than 200, and then the valuation today and year before is less than or below the price. So the price is already expensive. In average, the valuation is 100, but the price is up to 196. The third largest in market cap is MBSS, Mitra Bahtera Segara Sejati. The current price is about 1,200, and the valuation is above 2,000, and then growing in the latest quarter is 2,400. So only this MBSS with the largest market capitalization is the sounding or the have a room for price to grow, given the fact that the valuation is above, it's a double, is a 2 times of the current price at this moment. So there is a prospect. So if we see MBSS in terms of asset, is it number 3 in asset. So there is a good prospect though. So the next prospect is Nelly, Pelayaran Nelly Dwi Putri. The market cap is below 1 trillion. The current price is 200, and then valuation is about 300 more. But if we see in terms of asset, Nelly is the second from the bottom in terms of the asset, less than 500 billion, the smaller cap, the small cap. So we are going to skip this because smaller cap usually raises speculation. Nelly is a small market cap and small asset, so we better skip this. The last one is Rig Tenders, shipping company for oil and gas. You see there is a growth, uptrend or jump in the valuation. From last year is 900, and now its jump is to 1,700, and the price only less than 400. Rig Tenders, if we see the market cap, is the smallest market cap. But how about in asset? In asset there is number 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Number 10 in asset, less than 2 trillion, but they still keep a potential, so much room for price to go. But because they are very small cap and the asset is less than 1 trillion, so we don't recommend you to collect this, even though there is still undervalue, much undervalue. How about the rest? If you check the price compared to valuation, most of them are already expensive or overvalued. So we can't recommend anything to buy because all in the overvalue situation, only one company with more than 2 trillion in market caps is Mitra Bahtera Segara Sejati MBSS. Okay, for the conclusion, it seems it's very difficult for the shipping company to grow, to develop in this country, especially for the shipping company listed in the stock market. Their performance either small in market caps and small in terms of asset. Also, the performance is not quite impressive or unsound in terms of free cash flow, net income, and then financial ratios such as return on asset and return on equity. You cannot find the good number. If we check the TMAS with return on equity 36%, but return on asset only 7%. In this case, this is because they have a quite big equity, but in terms of productivity of asset is very low. So in this case, we cannot find the good company. If we check the TPMA, there is a new IPO company. The market cap is less than 1 trillion, asset is less than 1 trillion, and then return on equity also is good, is 29%. Return on equity is above 10, but again it's very small cap, so nothing we can do much about it. So let's finish up and see you next time with my other presentation. Thank you.